Hey everybody, good to be here. My name is Brent Moores, and time for managing an options portfolio. Excuse me. Uh, Today we're going to talk about, I want to talk about finding how I find these example trades I do in my various webcasts. And then I also want to talk about individual options positions that we have and talk about managing those as we do each week. So I'm glad you're here. See some familiar names in the chat. And if you're new, hey, we're glad to have you too. And if you're watching on a recording, grateful for you as well. Just a reminder, you can certainly follow me if you like on X at Brent Moore CS. That's formerly known as Twitter. I post financial content throughout the week there. And remember, options do carry a high level of risk. They're not suitable for all investors. Multi-leg option strategies, which we often look at, do involve multiple transaction costs. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Material today is for general informational, educational purposes only. We'll look at individual stocks. We'll look at individual option trades. Those are not recommendations. Those are just examples. Schwab does not recommend the use of technical analysis as the sole means of investment research. All investing involves risk, including loss of principal. Past performance is no guarantee of future results. Let's head on over to the Thinkorswim desktop software. That's what we're looking at today. And there's a lot of features on this platform that some of you are familiar with, some of you maybe not as much, but I want to get everybody familiar with a certain feature or a few features because they're pretty integral to the platform. And then you can hopefully customize them. Hopefully you can make this session your own, so to speak. In other words, I'm going to show you some specific scans, stuff like that. Just realize, tweak them, make them your own here on this. I have today a 10 and a 30-day moving average on my chart. It's a little different. Often I use a 20 and 50. Everything I talk about, you can apply to either. But when I'm looking for trades, looking for potential trades, right, and these aren't recommendations, very often I go to a watch list. And I'll start with a public watch list. You can do a public watch list or you can do a private watch list, either way. But just realize there is the distinction between the two. Open up the left-hand column. You guys probably know how to do that. Click on that. And you can go down and if you want to add a watch list, click on the little plus sign in the bottom left portion of the page. Now, when you click on watch lists, there's personal watch lists, and I have a lot of personal watch lists. You don't need to have that many. And I have public watch lists. There's public watch lists. You have these as well, the same ones I do. You can start with the public watch list. But when you're an options trader, one of the key things you need to worry about is liquidity. So if you're going to use a public watch list, you're probably not going to just throw in anything, all these particular stocks. I would even caution, I could do the Russell, the Russell 1000, which has 1,000 stocks in it. They're not the small caps like the Russell 2000, but most of those are not liquid enough for options, okay? Russell 2000, I'd venture to say probably none of those are liquid enough for options, if they even have options, okay? Even the S&P 500. So that's why I mentioned the S&P 100. Now, once you have that list, you may want to narrow it down to, some other quality of what you want. So for example, here I have a column. It's a custom column, and I'll share that custom column with you. If you're watching live, I'm going to put it in the chat. If you're watching on a recording, I put it in the description of the webcast here. But basically this column is the stock that we're looking at above the 10 and the 30-day moving average. Okay. And the one indicates that it is above both of those. And if it's a zero, if I scroll down, it indicates that both conditions aren't met, or at least one of those two conditions aren't met. So what I can do is I can then take my S&P 100 and I can go down and I can scroll, I can sort by this. You can always sort by that column there. And there you go. And just a reminder, on these scripts, they're not guaranteed for timing or accuracy here. So I think what we'll find is most of them, it should work, right? We're above our 10-day moving average, which is in the white. We're above our 30, which is in the lavender. And that would be, for most technicians, more of a bullish sign. Okay. I may still consider things like, oh, well, maybe there's some resistance on this. And I may not do a bullish trade because of that. Okay. Maybe I think of it that way. But as I scroll through, these are going to be above the 10 and the 30. These are going to be probably more liquid on the stock end of things. I'll still want to check the individual option because I'll tell you, the S&P 100, there's some stocks here that just aren't great for options, probably because of the liquidity standpoint here on this. But I can certainly do this. And you can find your column that you want there. I shared you with this one, but if there's some other column that you want to use or create, you can use this. But as you just scroll through these, and as you look at these stocks, you can say, hey, generally these are an uptrend. Look, if a stock's above its 10 and 30-day moving average, it's probably in an uptrend. Okay. Do you see some potential bullish type trades here? We don't have to focus on bullish. We'll look at some bearish ones too in just a little bit. But this particular scan would be more for bullish type trades. And you can see, hey, look, we actually already have a trade on this one. You can see the order on that. And some maybe look better than others, but this one, you see, we're kind of right on the verge of being above that 20, not so much an uptrend. But most of those actually have looked pretty strong trend. Okay, so that's the first thing. Now, personally, I don't do that as much. I'll often use a personal watch list. And the key with personal watch lists is you can just create a static watch list. I've created some here, crypto, default, defense stocks, whatever. Those are static watch lists. How do I know they're static watch lists? By static, I mean the list always stays the same because they don't have that little purple sign next to them. The purple sign means that they are, it's a dynamic watch list. In other words, it updates. Look, I have one bullish, no earnings S&P 100. Okay, fair enough. This is going to change because this says no earnings. Well, the list of stocks that have earnings coming up is going to change. So that will update. You can create any of these dynamic watch lists by creating a scan. So let's do that. So what I can do is I can do a scan, and let me get rid of this over here. And I actually have a scan that I've created, and I've done this one in the past. And that scan is for liquid stocks. Okay, and I'm going to show you that scan in a sec. But the thing is, once you create a scan and save the scan, the beauty is it saves it automatically to your personal watch lists. So I have one over here that I've labeled liquid stocks. I didn't just type in this list, I created it as a scan here. Okay, so let me go over here. I can go to my little menu over here. I can go to load scan query, personal, and I've saved this and liquid stocks. Now let's look at this. Okay. And I can click on scan and run it. Okay. So instead of 13,000 stocks or something like that, it narrows the list down to 74 stocks. So clearly a different list than the S&P 100 that we talked about before. Let me shrink down this left-hand side. We'll go back to that in a minute. But here's what I want to point out. I want to point out some different parameters I put on this scan, how you created the scan. First of all, we went to the scan tab. Secondly, we went to Stock Hacker. Okay. And then if you already have existing elements in there, you can clear the filters here. Okay. Clear out the filters. But on this, I started with the S&P 500. Now we end up with 74 stocks, but we're starting with 500. Okay. Not all stocks out there. I'm also intersecting with penny increment options. Why? Because I'm trying to find more liquid stocks. The whole point of this isn't bullish or bearish. The whole point of this list is I'm using liquid stocks. Okay, finding stocks that are more likely to be conducive to option trading, appropriate to option trading, whether they're bullish, bearish, or neutral. Okay, so therefore, when I look at so by doing penny increment options, and basically what that means is the price of the option itself can change by the penny. Some options you don't see that. You'll see the option price will be 310 and you will never see it be 312 or 313. It will only go up to 320. Okay, that's not a penny increment option because the penny, it doesn't change to the penny level on that. So that helps to narrow down the list. Just going S&P 500 penny increment options is going to narrow it down significantly. Now I added some other things in there. I said a minimum closing price of $20. The reality is that's not limiting it that much, to be honest, because S&P 500 stocks, the vast majority of S&P 500 stocks are already going to be $20 or more. But remember, this isn't a suggestion of exactly what you should do. It's I wanted you to be aware of the settings that you can use so that you can create your own scan there. All right? Now, I did another one. This is a study filter. The thing about study filters is they're great, they're awesome, but the bad thing about them is they don't work on paper money. So you need to be on your live platform to do a study filter. But I did a study filter for average volume. And what I said is the 50-day average volume for these is greater than 8 million shares a day. Okay. Now, could you do 5 million? You could do 5 million. If you're trying to find liquid options, I'd probably do at least 5 million, to be honest. Could you do 10? You can do 10 million. You can do 15 million, something like that. Obviously, if you do 15, you're going to get fewer results. But I think this is a good starting point here. Once you create the scan, you can save it right up here. I've already created this one, so I'm not going to save this one again because that wouldn't make any sense. But if I go up here, click, and then I save the scan query. Okay, now I'm going to share this scan with you. Okay, you could create it on your own. In fact, I'd encourage you to create it on your own and tweak it how you want it to. Okay, so I'm going to go to. Let me just throw this. I'm going to put this in the chat. And again, these scans aren't guaranteed for accuracy or timing. No guarantees here, but I think if you look at them, they work pretty well for what their purported purpose is to try and narrow down that universe of stocks to the more liquid ones. Again, we're going to want to check the individual options there. I put that in the chat. If you're watching on a recording, it's in the description of the webcast as well. Now, here's the beauty of these. Once you've done this and you've created this scan, what you can then do is you can then go to charts. Actually, doesn't matter where you go, I guess. Pull up the scan, and I have this same kind of list that I have. I'm sorting it. In this case, this is my bullish sort. You can create a bearish sort. You could just reverse this and go, I want stocks that are below my 10 and my 30-day moving average, and to find a bearish trend. Right now, the market's more or less trending up, so you're going to find more bullish than bearish. But as you go down, you can look for stocks that are appropriate on here. Okay? And you can see the trend is strong on a lot of these. Okay. I can then do a trade. And so if I want to add this trade, what do we know about this? Well, we know this passed our first test of being on the liquid stocks list. It passed the second test of coming up. Again, I've sorted by above the 10 and 30. And then I'm going to look at this and then say, am I concerned about other issues on this? Does the trend really look good? Or does it just happen to be above the 10 and 30 and is mostly going sideways? Whatever. Whatever you think is you need for the bullish trend. And then you can do a trade. In this case, let's do an example trade here. So I'm going to do a bullish trade, but I want to look at individual options on this, okay? And just kind of double check. Typically, more often than not, weekly options are going to be less liquid than monthly options. Let's go here. Let's look at October 2nd options, and let's look at October 16th options. Here's your weekly, and this is just kind of a generalization. It's not always going to be the case on this. But as I look here, and I have a column for open interest, which I'm going to focus on, and then I'm also going to look at the difference between my bid price and my ask price. So if I look at my open interest, you can see for the weekly options, there it is. Some are maybe okay, a couple hundred, 100 or so, some not so much. If you look at the monthly options, they're much higher. And that translates to bid-ask spreads typically. So if I look at, for example, the $26 contract, 162 to 182. Well, that's, what is that, 18 cents, if I'm doing my math right, I think, 18 cents. And the 26, this is about 14 cents. So a little better. In general, as you look at these, and these aren't terrible here, this is when you look at the bid-ask spread, look for the difference between the bid price and the ask price. And generally what I like to see is the difference between the bid price and the ask price to be less than 10% from one another. How do I do that? Look, if I go and I see an option that's $1.82 ask price, I'd like the bid price to be within 18 cents of that, for example, and just moving that decimal point over in that case. All right, so that's kind of an example of this. If you start to go to, that's why we started with the liquid options list here. So let's do a trade, and then I want to show you some other stuff on this before we get to our management of our other trades here. So I'm going to go to the monthly contracts. I'm going to go to the more liquid ones. And I'm going to do a long call vertical here. So with a long call vertical, I'm going to go with the trend, okay? And I'm going to say, well, how high is this likely to go here? We're going out to October 16th. So, we got a little ways on this, a month and a half or so to go on this. So I'm going to say, if it continues where it's going, which is my expectation, may very well not. It's likely not to get above. I don't think we're looking up here probably. So I'm going to cap it down here, maybe around the 29. And I also want to get out if it starts to break, and we'll say, 26 is where. So I'm going to go to like a 26.29 on a long call vertical. The 26 is the 29, the higher strike on that long call vertical is the one where you think it has more of a potential to reach, okay? So double check my bid-ask spread. That's going to be my short contract. I'm just going to click on that. I'm going to go to my 26. This is the level I think it's going to stay above, 26. Okay? We could do 27 if we want, but I'm going to do 26. I'm going to hold down my control key, click on that, and then as I look at it, I have a long call vertical spread here on this. I can click on confirm and send, and I can look. Max profit 166, max loss 134. Keep that in mind. Break even about 27.34, which is pretty close to where we're at. We're at 27.08. So we need it to go up just a little bit to hit our break even. And ultimately we have more max profit than max loss. We're kind of planning that technical analysis that the trend is going to hold on this here. Okay. And so I'm going to, we'll put this well, let me send this here. And I'm just going to do one contract on that. Okay, so we just sent that and it's thinking. Let me go and show my groups here and see if we can get this to fill. I'm going to right click on this. I'm going to cancel and replace this. It went in at the mid price. I'm going to have to go off the mid price a little bit to get a fill. And then if I send that, there we go. Okay. So, and then in terms of management, you guys are probably familiar with this, but if you put it in a certain place, you can add it to a different group by right clicking on it, move to group, and we're going to put this in our long verticals group. Okay. So that's a long call vertical bullish trade. Now, can we do a bearish trade? Yes, we can do a bearish trade. Now, here's the thing. I'm going to go here and I'm going to just clear out. I'm going to remove all my filters. So we're going to start from scratch. That removes the filters. And let me clear up here. And we're really kind of, let's say we're starting with all stocks here. Okay. So if I were to run that scan, it'd give me a bazillion results here. But the nice thing about having saved the liquid stock scan is I can then use that as a filter on additional scans I want to create. So instead of scanning all stocks, I can go to my personal scans, personal watch list, or personal scans, that I've saved. You can do the same thing with the personal scans that you've saved. But for our purposes here right now, I'm going to go to that liquid stock scan. Now, if you haven't already saved the liquid stocks scan, you can't use this scan, right? So you would need to save this one. But let's create our own and let's make this a bearish scan. And just remember, once we create the scan and save it, it becomes a watch list that we can then look for a bearish type trade. So I'm doing a bearish trade on here. I'm starting with liquid stocks. So now when I start adding filters, I don't need to add things like stock price or volume because I've already added that by including this liquid stock scan here. I'm going to go to my study filters. If you try and do this in paper money, it's not going to work. It needs to be in your live platform. When you click on study filters, it's going to give you a message that says, you can't do it. Okay. But we're going to make this simple. I'm going to go to study. I'm going to go down to popular studies, and I'm going to just do a moving average scan. And I'm going to do essentially what I did before, but I'm going to create it from scratch. Okay. Remember that watch list? We did below the 10 or above the 10 and the 30. Well, let's do a scan. Moving average scan. The close is at least, and I'm going to just make this 1% below, and we're going to make that the 10-day moving average, simple moving average, okay? Now, I'm also going to, and I can click on scan, and it's going to give me 19 results. Well, we'll narrow it down a little more, I think, because we're going to add in some other filters. Here, I'm going to add in the filter, study filter. I'm going to do the exact same filter, except with one little tweak. I'm going to go to popular studies, moving average scan, close is at least, I'm going to say 1% below, you guessed it, the 30-day simple moving average there. And then let me just to kind of add in a little bit more here, just to familiarize yourself with another one. I'm going to add in another filter, another study filter, and I'm going to say, I'm going to go down to price performance, and I'm going to go to price direction. And this is one that's kind of neat because you can kind of see that even if it's trending down, I don't want something that's bouncing up. So I could say the close has decreased, and we could say over the last 2 days, 3 days. I'm just going to do 1 day here, okay? And I'm going to click on that. We're down to 9 results, and I'm going to do just one more criterion here. I'm going to add filter. It's going to be a study filter. I don't want to deal with earnings on this trade, okay? I don't want to deal with earnings. So therefore, I'm going to go to corporate actions. I'm going to go to earnings, and I'm going to say earnings. It does not have earnings anytime over the next, we'll say month. 21 days, trading days is equivalent to basically 1 calendar month there. Okay, so I'm going to scan that and we'll call that good. So, okay, we got 8 results here. on this. Now, remember, well, let's do this. Let's save it. Okay, let's save it. So I'm going to click on my little 3-line menu. I'm going to save the scan query. Hold on. What did I do? It contains a circular reference. I haven't seen that. Oh, it didn't like that I started with the liquid stocks scan. I can do this. Okay. If you don't start already with, I already had loaded the liquid stock scan. So this is going to be kind of an obscure issue, I think, that you're not going to deal with here. Okay. You can do exactly what I just mentioned. You can use a personal watch list and embed that in a scan. Okay. That's no problem at all. The problem is I started with the liquid stock scan. I didn't change it. And then I just started adding in more parameters here on this. So it's giving me an error message for that reason there. Okay. So it's a weird message. And to be honest, I don't think I've seen that message before, but I'm pretty sure that's why that's giving me that message there. But let's go through and look. So we've got results here. And some of these are results that I may decide I don't really want to do for other reasons. And let me give you an example on this. NVIDIA has earnings tonight. Okay, today, after market close. Okay. In my mind, that can certainly push the market, no doubt, but it's especially likely to push chip-related stocks, such as Applied Materials, okay, such as Intel, okay? So even though these meet all the parameters that we want, maybe we skip those, okay? Maybe we skip that. Okay, so instead I'm going to look at something else. Well, look, I already actually have a trade on Kraft Heinz. I already have a trade going on Nextera. Let's go to Nike. How about? I don't have an existing trade on Nike, I don't believe. So let's look at Nike. Okay? And presumably this should be kind of bearish looking, which we've seen. I actually posted an X post on this yesterday or maybe the day before on the 10-year chart of Nike. And Nike's just been really poor performance the last five years. Nothing against Nike, just the stock performance has been poor. But what do I have here? I have a downward trend. We're below our 10-day and our 30-day moving average. Well, we know that because it came up in our scan. Okay. And there we go. So we're actually down today, which we figured because that was part of our parameter. Let's do a similar type thing, and then I want to get to managing some existing trades. But I'm going to do a bearish trade on Nike. I'm going to go a little shorter term on Nike. Where's our earnings? Last earnings was late June, July, August, September. So next earnings is probably late September, most likely. And so I'm going to go, and you can always see usually you can kind of see when earnings is by looking at your implied volatilities. When you get a big jump in that implied volatilities in the later date, like you do here, usually that means earnings is before this contract, but after this contract. You could double check, but that's typically how that is. Regardless, I'm going to go to our monthly contracts there on that, okay? So I'm going to go to September 18th, and I'm going to do a bearish trade here because our trend is down, etc. Okay. And what am I well, remember, now I'm going to do a long put vertical, so I'm just going to reverse the long call vertical. And remember, on the verticals, what we're going to do is we're going to say, I don't think it's going to go back above about this level. So I'm going to say 40. And I think it's going to go down a little ways, maybe not all the way to 35. Remember, we're only going out like 3 weeks on this or something like that. So maybe in between there, between the 40 and the 35. We'll see what's available here for us. So let me go to the trade tab. And I'm going to go here. And here's my 40. This is going to be my long contract. I'm just going to click on it. Okay. And I could go down here. I can go all the way down if I want to 37. Double check the bid-ask spread on that. I'm going to hold down my control key on that one. And there's our long put vertical. Okay. Someone in the chat says, Jewel says, already have a long put vertical on Nike, doing well. So, well, you know, we don't know how it's going to go from here on. Maybe, you know, this represents the very bottom of Nike, but so far, not surprised, it's been doing fairly well. Okay. And so, and then you can click on confirm and send, and you can double check max loss, max gain, break even price. 38.35 is the break even. We're a little bit above that right now. Doesn't need to move much though. And then if I want to send it, of course, I can put it in my group if I want, long verticals, and send that. There's my long put vertical on Nike. So I'm hoping that's helpful. When I'm looking, just to kind of wrap this part up before we go to managing some of these trades, when I'm looking for opportunities, typically I'm doing it based off of a watch list. Usually that watch list has started as a scan, okay? Whether it's the liquid option scan and then just using our columns, whatever column you want to define bullish or bearish or neutral, or if it's something where you've saved, where it's actually more of a bearish scan that you've saved, okay? So there we go. Let's go and talk about some management of these trades. Let's continue with these verticals. We just added a couple verticals. We added the vertical on Comcast. We added the vertical on Nike. Typically, when we get close to expiration, regardless of how it's doing, when I say close to expiration, about a week till expiration, we're going to look to probably exit that trade. But we're also going to exit if things are going bad or if they're going good enough. Okay? We have a put vertical, long put vertical on NextEra Energy. Right now, it's doing okay. We're up a little bit on this. And so it's probably not looking bearish, I'm guessing. We can look at the chart just to double check because, sorry, this is the long put vertical. It's not looking bullish, I'm guessing, because we want to probably be making money right now, even though it's not a lot of money. And it's not an unrealized gain, just to be clear on that. And it's paper money, of course. But so it's doing okay. But if I turn bullish on this, then I'm probably going to want to exit. Okay, that'd be one reason to get out. Okay. Number two, let's say I had an earnings coming up. Now, don't get fooled. That's not an earnings. This is a dividend there. This is what earnings looks like. If I had an earnings coming up here, I may say, you know what? I don't want to deal with that extra uncertainty with earnings. And therefore, I'm going to get out of that trade and just avoid it. So there's no compelling reason from that standpoint to get out. But there's another reason we may get out, and that is if we've made most of what we can make. Because let's say we've made most of what we can make on this. Then we're still have the same potential risk if it turns south on us. If it goes against us, the risk hasn't changed on that. But what we have left to make on it is very little, perhaps. But in this case, you can see we're up about 23% on that. That's that's not, we can certainly do a lot more on a long vertical. Okay. Another way to do that is to look at the trade price. We bought this for about $1.40. Okay. Right now, it's about, let's see, 410 minus 240 is about a dollar. Sorry, my brain isn't working here right now. About $1.70 right now, I think, on that. And so there's still a lot we could make. We got a $5 spread here. Not, excuse me, we got a $2.50 spread. So potentially this could go up to $2.50 difference on those. Theoretically, I mean, practically it can actually go up more because of slippage and stuff like that. But realistically, that's what we're gunning for. The point is, we've made some money, but we're going to stick with it here on this trade at this point right now. Okay. Eric says, huge volume on Nike puts. Well, a lot of people would interpret that as kind of a bearish sign on Nike. It doesn't necessarily mean it's going to go that way, because remember, anytime someone is buying a put, someone else is saying, hey, I'm willing to sell that put. But Nike's been in the news. Dick's Sporting Goods just had an earning, just a terrible earnings report, and Nike reacted negatively. If things weren't already bad enough on Nike, they actually got hit harder after the Dick's news as well there. Okay. So I think that's the volume on that. Okay. So that's our long verticals. We kind of talked managing those. Let's go to short verticals. So, or short, if I have short verticals. I don't think I have any short verticals right now, actually. I have a couple short puts. We're going to manage these slightly different from one another. This is something we've talked about in the past. This is our wheel strategy trade, okay? And on our wheel strategy trade, in other words, we're selling a put, and we're saying when we sell that put, it's okay if we buy the stock, because we're going to turn around if we buy the stock and then turn and sell a cover call on it. But the first step is you sell the put, which we did, and if the put stays above the strike price, which is 26, and it's not, we're below it right now. If it stays above the strike price and it expires and we don't have an early assignment for some reason, then we could just turn around and sell another put. Look to do that. But in the case that it gets assigned, and currently it's on the trajectory to get assigned, we'd end up buying the stock, which is fine because this is the wheel strategy and we're going to plan on turning around and cover call. So that's the plan on this one. So therefore, we're not going to manage that. We're just going to let that run. Okay. PayPal's a different story. It's not wheel strategy. This is just a short put. And on a short put, if we're going to look to get out before expiration. So if we get to about a week before expiration, remember, anytime we're talking about short options, they can be assigned early. Furthermore, what we can do is we can say, look, if things are going bad on us, and it's not in this case, we're going to decide, are we still bullish or not? If we're still bullish, PYPL, and even if we're losing some money, we may stick with it. In this case, we're actually not in the hole on this. Things are going pretty well. At a certain point, if a stock has made enough, we already talked about this with the vertical. The vertical we looked at, it made a little bit, but it hadn't made enough. But let's look at this. This is a little bit of a different situation. We traded this for 123 bucks. That was the initial price. I'm not factoring commissions here. It's now down to, we could buy it back for approximately, we can try and buy it back for around 19 cents. That is probably, so we only have $19 more we could potentially make on this trade. Okay. We still have 23 days to go. For a lot of traders, they'd say, I'm just going to take that risk off the table and get out of the trade. And that's what we're going to do in this case. Okay. How much is enough. The rule we've used in this webcast, it's not a universal rule for everybody, is about 80%, okay? About 80% on that. So have we made 80%? Yeah, we have made 80%. Because 90% would mean it's worth, I'm just going to take this, multiply it by 0.1 would mean there's about 10% left in it, or we've made 90%. Well, that'd be about 12 cents. But if I made 80%, it'd be about twice that, about 24 cents. So about 24, it's less than 24. We're going to look and we're going to manage that trade. Okay. We're going to exit it. We're going to try and get out. There we go. And I'm going to confirm and send, and I'm going to send that order and take our profits on that. Okay, let's move forward. We're getting low on time. Let's go through a few others. Okay, last week in our advanced options webcast, we did diagonal spreads. By the way, if you're newer, well, not brand new necessarily, but if you're interested in some of these different types of trades, calendars, diagonals, butterflies, synthetics, right? All these variety of option trades you can do, I'd encourage you to check out the advanced options webcast. In the playlist for that class, I have each week I'm going through a different topic, a different strategy, and discussing it. So if you want to learn more about those, that webcast occurs on Fridays. You can also check them out recorded too. But last Friday, we started to do some diagonal spreads. I did one on General Mills. We still have a ways to go till expiration, 23 days. We've only been in this a few days, so we're not going to get out just because of that. But, things are going okay. If it's a bullish trade, it's a long call diagonal, which is a bullish trade. If you are trying to manage these trades that get a little bit more on the complex end of things, that you don't just, maybe long call, I want it to go up, or short call vertical, I want it to go down. Maybe you get a little confused on diagonal spreads or butterflies or something like this. You can always go to the Analyze tab and you can look at it. That's the wrong stock. You can look at General Mills. Here's our current stock price right here. And you can see it's doing this. Look at the difference between the blue line right up here and this purple line. That represents time decay. So if the stock stays in this range here, time decay, the purple line is going to get close to that blue line, and time decay is going to help us out. And we want time decay to help us out. Okay? This is a positive theta trade. Which is great. That's what we want. We're going to stick with that one. The same can probably be said on Uber. Uber, you'll notice a difference on these. I didn't put a stop on General Mills. On Uber, I actually have a stop in here. I think I marked it. Exit less than 74. So time decay is positive on Uber. Let's look at Uber. U-B-E-R. Bullish trade. It was going up. Today, not so hot on this. We've actually reversed ourselves on that from when I've looked at it last. And you can see this is where we are. So we still have a profit, but it's not as good as it was looking earlier today, I'll tell you that. You could consider moving that stop up. We said it was at 74, but I'm just going to leave it as is right now. Okay. Now, we have time for maybe one more, and then I'm going to have to call it a day here. Okay. Let's go to one that is, let me just briefly say, we have some synthetics in here. Okay. CSX, KO, Visa, they're actually all doing relatively well. The one trade that's not doing so great is our Schlumberger. This is our poor man's covered call. We're selling calls against. It's not a covered call. We call it poor man's covered call. It's not really a covered call. It's a diagonal spread. But it's kind of the specialized thing where we're going to just kind of keep on trying to roll this and view this almost as if it were like the stock. It's not the stock, it's different. Um, but you can see we're kind of in the hole on this. Okay, we're down a little bit. The short calls actually help to offset it, not much, just a little bit. But we're going to look to roll this as we go forward. When are we going to roll this contract? We're going to roll this when we get near expiration. We'll say about a week to go to expiration. We still have a little bit to go on that. Or if we've made most of what we can make on this. Well, we haven't. Okay. We've made just a little bit, but not much on this. So this is still going to be, we're still just going to sit on this. We're going to still try to roll this each, periodically and try and recapture this. And hopefully the stock continues to go up. It's still a positive delta trade. So we need Schlumberger to go up. As long as we're bullish on this, we're going to let this work. That may change. We'll see. All right, everybody. Thank you very much for this. I'm trying to think. Did we get a survey link today? I don't think we did. So no survey today, but I appreciate you joining. And one thing you can do for me, if you like the session, is click on the like button at the bottom of the page, the thumbs up. Also subscribe to that Trader Talks channel. I appreciate you for joining me, taking some time out of your schedule. And I appreciate Scott for helping me out in the chat there. Everybody, we will see you all same time next week. In the meantime, coming up next, we got trading price patterns. And I think Mike Fairborn's teaching that one today, if I'm not mistaken. Appreciate y'all. Bye-bye, everybody.